What is up? What is up, everyone? What is up, YouTube? What is up, Outcome Reach family? Hope everyone has had a phenomenal trading week and a great start to the Friday so far. So, in this video, I want to, kind of recap on market structure and then talk about um, expansions and retracements, right? So, basic things that we see in market structure, right, are, your uptrends, you have a higher high and higher lows, and downtrends, you have lower highs and lower lows, and that would look something like this, right? We have the higher high, higher low, boom, and then we have lower low, lower high, lower low, lower high, lower low, lower high, and so on, right? So when we look at structure like this, we are looking in a uptrend and a downtrend um, perspective, right? So when we see, like for instance, right here, when we see this high get broken by this expansion, right? We most likely want to see a retracement come back into that area of previous broken structure. So an expansion occurs when there is an impulse movement towards a direction, right? And usually intended in, higher time frame directions. And your retracement is going to be your correction movement after the impulse has been made. So, once again, right here, let's say we have our higher high right here, and then our higher low, right? So at this point in the market, when we see this expansion come up and create a new higher high for us, we should be expecting a retracement, right? And your retracements is what's going to give us that higher low. And once again, we get that higher high and that higher low. So remember, remember your expansions are going to be what gives you the higher highs in an uptrend, and then your corrections is what's going to give you your higher lows for those entry points, right? Those areas that you look to enter for. And same for a downtrend as well, right? So we have a lower high, lower low, lower high, lower low, and a lower high in a downtrend, right? So what we would look for is structure to be continuously broken to the downside for us to look for potential entries here, here, and here. Okay. So, you know, this is really, really, really simple when you look at it. And, when you train your eyes to look at things like this, right? It's very, very simple. And another thing you can use, another thing you can utilize when you see the expansions occur, you can also use Fibonacci's to determine where your next potential entry could be, right? So let's say, we saw this high get broken right here, and we created a new higher high. So in order for me to, you know, it's more or less to determine a specific area based on structure to determine really where the end of a retracement could possibly be at, right? It's just to determine that, right? So we could throw a Fibonacci from that previous low that created this expansion up and broke that previous structure, right? So yeah, and not in my example here, but I guess if I, if you look at this on a chart, right, there might be a wick or whatever. I didn't draw it the best, but you can see right here is where that structure got broken. So from this area would be what I would be looking around. So you can see right here, right, on this example, it lines up around that 62 fib area, right, giving us that next expansion in price. Same thing over on the sell side, right? When we start seeing those lower highs and lower lows break structure, right? Lower high, lower low. Okay, so we have this lower high. We came down and broke this structure and created a lower low. So since we broke that structure here, we should be expecting a retracement, right? Well, price retraces back up into that area of previous structure where structure is broken, or maybe it's not even just this structure. Maybe there's an area in this, or maybe there's a certain um, thing to look for in this area of price, right? And what I mean by that is, say we're heading in a downtrend like this, right? And we get a nice candle formation like this, okay? And then let's say we broke price or broke market structure again to the left, okay? So what we would be looking for is after this break of structure, we would want that retracement to come back up into a specific area. Maybe that might be, a, a order block or outcome candle, whatever you want to call it. Maybe there's a fair value gap or inefficiency, whatever you want to call that, in this area as well. And that can also be something that can help you um, with the fibs as well. Say there's wicks, we'll throw little wicks on there. So say we have a retracement from this high down to this low, right? And you can see in that area, right, it lined up between that 72 and 62 fib area. So in this particular area right here, we're anticipating, we're not guessing, we're not forcing it, we're not, we're not trying to, just get in because of a 62 or a 72. No, we are basing these expansions and retracements and Fibonacci, um, levels solely off of structure. So off of this area, you would expect or anticipate to see another expansion breaking this structure again to the downside, right? So, once again, your expansions occur when there is an impulse movement towards a direction, right? So we saw that here. We saw this expansion towards this direction to the downside. And your retracement is the corrective movement after an impulse, right? And another thing to take note of is if you're on the higher time frame, right? Let's say let's say this is a daily structure right here. We'll say this is daily structure, right? Well, another thing to take into consideration with this is we'll go green. So after this, daily impulse has broken this structure right here. Another thing to take into consideration is this area down here to give us that retracement back up, to give us that, corrective move. There might be some lower time frame bullish price action, considering that, we are in a higher time frame downtrend. So after, you might start to see something like this. And right there on the lower time frame, you would be bullish until price got up to this area here and you started seeing bearish price action again, like such. Okay. So hopefully that makes sense a little bit. Um, because it can confuse a lot of people. They'll look at this and they'll say, you know, well, structure got broken to the upside here and here and here and here, right? And then by that time, we're buying, or well, you would be buying into the end of that, that retracement. You would be buying into the end of that corrective move. You would be technically buying into a supply area, right? And we all know that supply is high and demand is low, right? So your demand area started down here, and that previous broken structure is our anticipation area to then give us, our supply area. And that's what I mean too, also by, you can even use this on a lower time frame. Once you start to see, you know, you can map this out, right? You can go higher time frame like this. It's bearish, right? Higher time frame is bearish. But then we look at, say, the 1 hour, okay? 1 hour just confirmed that it's bullish. 1 hour, we have confirmed that it's bullish. But then we get back up into this area right here, this previous area of broken structure. We need to pay attention to what is going on in this area, because maybe then we'll see on the 15-minute or something, maybe the 5, 15, whichever lower time frame starts to go bearish again. And then with that, later on, you start to see your 1 hour go bearish as well. So you see the 1 hour start to go bearish. So now you got to think, okay, my higher time frame is now equal with my lower time frames, right? They're both saying bearish. So now you have yourself a nice setup. And that's where another instance of Fibonacci can come into play as well, right? We can take that high that got that high to the low that got broken, where that expansion was, right? That expansion here. Oh, there we go. That expansion right here that broke that lower time frame structure, we see it trade back up into our area of interest, and we catch this next expansion to the downside. And this can go for, you know, any time frame as well. This can go for, you know, monthly all the way down to the 1 minute time frame. It doesn't matter because price is fractal, right? And I've talked about it many times. I've talked about um, you know, price doing the same things, you know, on a higher time frame. It does the same things on a lower time frame. And what that essentially is, you know, what fractal is is you know, it's technically the replication of something bigger into a smaller sequence per se. Um, and also another thing to throw in on this, don't ever look for a retracement if there isn't a break in structure, right? Like this, like right here. Don't ever look for a retracement if there isn't a break in structure, right? Because then you'll be going like this. Say, we're going in an uptrend right here, and then we get to about this area, right? And then we get here again, and then we go like this. Well, if you know, if you thought that this was a break in structure to the downside, you would have been screwed trying to enter right here. So always, you know, let's draw that again. Always look for a break in structure like this, right? And then you can catch that area right here, right? And then the retracement possibly to come back in that area and continue on with the direction that the market was intended to go to, right? So hopefully that's all making sense. Let's go over here and look at this example that I have on Euro GBP of perfect market structure, perfect expansions and retracements, right? So looking at this, right, from a hindsight perspective, we you know, I've drawn everything out already, so it's pretty self-explanatory of what I've already went over. But you know, you can see every break in structure always makes a retracement. There's always a retracement, right? And you know, there doesn't always have to be a retracement, but man, like 80 to 90%, there's at least a retracement at least 3/4 of the way, right? At least 3/4 of the way. So what I mean by that is if you look at the expansions over here on the bullish side, you see this expansion right here. We see, sorry, if you look at this expansion over here on the bullish side, right, we see this retracement come back down maybe a third, fourth of the way from where this previous higher low was. But look at where it retested that previous higher high, right? Now, if we look at this again, where this new expansion was, this new expansion right here, right? This came back down literally like a fourth of, like almost all the way, right? Almost even making equal lows, almost, right? But look, here's where the close was, and here's where this close was. You see how it's just a little bit higher? Okay, that's still giving us bullish price action. And what do you know after that? We get a huge expansion, that final expansion up to the upside. And same with the downside as well. You know, right here, you know, expansions make lower lows and retracements make lower highs. So with that expansion right here, we saw this lower low get created. And then we got this retracement and this lower high got created. Why is it a lower high? Because it's lower than this previous high right here. And then we get an expansion to the downside, breaking this structure to the left. You can see it closed lower. This candle right here closed lower than this area here, giving us a lower low. We have that retracement back up, giving us a lower high. Once again, why is it a lower high? Because it is lower than this previous high, right? So hope you guys understand how you can utilize expansion and retracements, understanding that they make, in an uptrend, you're getting, higher highs, higher lows. Downtrend, you're getting lower highs, lower lows. Um, you know, it's it's something very, very, very simple, but yet you still have to train your eyes to see these types of things, right? That just goes with everything. Anything that you do in life, you have to train yourself to have that muscle memory, you know, to be able to see it, right? So if you like this video, give me a like, give me a subscribe, comment down below anything that you learned. I'd love to hear from you guys. If you guys have any ideas for future videos, I would love to take into consideration and conversate with you guys. And good luck trading. And let's get this money next week. Let's all have a good next week and enjoy the rest of your day and enjoy your weekend. Peace out. I will see you guys later.